there is normal multiple crypto projects that are going to do over 100x, to over 200x. A lot of people who typically wouldn't have the opportunity to make this type of profit in such a short period of time are now able to do that. They did over 1000x within less than 1 year. So just allocate $2,000-$3,000 and then come out with $200,000 or $300,000. So if you invested just $10 back then, do you know how much that would be worth today? That $10 investment today would have been about $1 billion in profit. Anyone who wants to make any degree of money passively, that is over 1 billion% in profit. The power of crypto is exponential and it is life-changing. That's when we start seeing prices of crypto project really pump. And like I said previously, it depends on two different things. So here is one important strategy or something to note when it comes to everyone's making money, everyone's happy, it's amazing, it's great, yes. But welcome to Crypto and You. This is my YouTube series where I react to content creators who make videos about cryptocurrency, finance, in hopes that I share some gems, some value that helps you level up your crypto journey. All right, let's hop into it.
What's up, Graham? It's Guys here, and I'm sure you're starting to see all these recommendations of the best cryptocurrencies to buy during the recent bull market. After all, if you bought Bitcoin earlier this year, you'd be up 140%. Dogecoin is up 350%, and Peanut the Squirrel coin gained about 1,500% in a week. I don't get that one. Anyway.
Okay. Let's talk about Peanut the Squirrel. The reality is when it comes to crypto, there are numerous amount of crypto that you are going to see do exponential type of profit. I'm talking about there is normal multiple crypto projects that are going to do over 100x, to over 200x. But the thing is, do not beat yourself up when you don't cash that crypto. We've seen crypto coin do exponentially. We saw the squirrel meme crypto coin that he was talking about do exponentially well. So in the world of crypto, just know you are not going to catch every single crypto project, but as long as if you're able to catch a few that do extremely well, it can be very profitable. Because you have to keep in mind that there's new crypto projects that are launching every single day, multiple crypto projects. So I would say it's nearly impossible to be able to catch every single one that's a winner.
2012 to find the commonalities that gave you the best chance at making money. Honestly, this information is so good that we have to talk about what they found, because I have a feeling this could be, as they say, one of the greatest wealth transfers to ever happen in history.
When people say one of the greatest wealth transfer that's ever happened, I don't really think it's wealth transfer. I don't think it's as one person giving money to another person in that sense where wealth is transferring. I think it's just an opportunity of a lot of people who typically wouldn't have the opportunity to make this type of profit in such a short period of time are now able to do that. Like I just gave the example about Solana. It did over 1000x within less than 1 year. Not a lot of people have the opportunity to just allocate $2,000-$3,000 and then come out with $200,000 or $300,000, because that money can completely change the course of your life. And it did it twice within a 3-4 year period.
This information is so good that we have to talk about what they found, because I have a feeling this could be, as they say, one of the greatest wealth transfers to ever happen in history. Although before we start, as usual, if you appreciate the information and just the facts, it would mean a lot to me if you hit the like button and subscribed.
Yes, hit the like button and subscribe.
All right, so on the surface, let's get this out of the way. We have a money problem. Despite the stock market hitting record highs and inflation cooling down to almost 2%, the average American is getting poorer each and every year. Like sure, we've seen an average 10% annualized return in the S&P 500 since the 1920s, but we've also printed 10% more money every year during that same time. Well, in many ways, that's what people believe cryptocurrency is.
This is why I think anyone who wants to make any degree of money passively needs to invest in crypto. Just take a step back and think about it. Every single year, all your money that you leave in the bank loses value, versus every year when you hold Bitcoin, the money you put into Bitcoin increases in value, because there is a limited supply of Bitcoin. And now at an international level, you have countries, you have institutions, you have retail traders like you and me who are now accumulating it. There is a scarce amount of Bitcoin, unlike cash, fiat where they keep printing more and more of it. But let's just stick to the video.
Actually, Bitcoin solves. After all, Bitcoin has been one of the asset classes to have outperformed the money supply by a wide margin. How? Well, after making its debut in 2009 after the Great Financial Crisis, it slowly adopted mainstream popularity, having now become the best performing asset of the last 2 decades, rising more than 18,000% since 2015.
Back in 2009, when Bitcoin first launched, do you know what was the price of just one Bitcoin? One Bitcoin was just 0.00099 Bitcoin. So if you invested just $10 in Bitcoin back then, do you know how much that would be worth today? I'm gonna give you 3 seconds to try to guess. That $10 investment in Bitcoin today would have been about $1 billion in profit. That is insane for just a $10 investment within such a short period of time. That is over 1 billion% in profit. I have never ever heard anyone on the internet, not Alex Ramosi, say I invested in this business or I started this business and I made over 1 billion% profit. Or Grant Cardone talk about, oh, I bought this place of this real estate building and I made 1 billion% profit. That is what I want people to understand. The power of crypto is exponential and it is life changing. Now, there are crypto projects that don't do well, and we're going to talk about that. But overall, if you know what you are doing and you invest at a good time, you can get exponential profit. You may not get a 1 billion% return, but you can still get amazing return and make amazing profit. And it's not like, oh, Bitcoin is over, prices are going to suddenly start crashing now, it's over. No, Bitcoin is just starting to get adopted by countries and institutions around the world. And yes, I know when you look at Bitcoin itself, it will not do that type of percentages within the next few years. But there are so many other crypto projects that every single year we see it do a 10x, a 20x, a 50x, a 100x. So there's still so many opportunities in the world of crypto. You just have to know what to look for so that when the opportunity comes, you can capture it.
Put into perspective how insane this is. That's a compound annual growth rate of more than 100%, or 10 times higher than that of the S&P 500. And the premise is that there's only ever going to be 21 million Bitcoins in existence, and that's it.
Side note, I think regardless if you're someone who wants to make profit in crypto, regardless if it's long-term profit or if it's short-term profit, I definitely think it is very, very, very smart to have both mindset, meaning you are investing and you are trading crypto to make money in the short term if that's what you want, but also you are trading and investing money to make profit in the long term. We know that Bitcoin is scarce. As of right now, there is already over 19 million Bitcoin in circulation. There is only about 2 more Bitcoin left to be mined, meaning there is not enough Bitcoin in the world for everyone just to have 1 Bitcoin. There's not even enough Bitcoin in the world for everyone to have half of 1 Bitcoin or for everyone to have 1/3 of Bitcoin. So just having that strategic long-term mindset, which is, hey, I'm just going to accumulate a little bit of Bitcoin over time, because guess what? 10 years is going to pass, 20 years is going to pass, 30 years is going to pass, and you're still going to be here. So imagine having an asset that is high demand and wanted and desired at a global level that continuously runs up in value. And you're able to accumulate this asset just by investing, dollar cost averaging little by little. And now you can potentially even lend it out to make profit. And this is all passively.
But even though Bitcoin has gone up over 20 million% since its inception, it's also not uncommon for it to drop 50 to 90% before eventually moving back even higher. So what does this mean for you watching, and how could you use this information to make money? Well, here's what you've been waiting for: the secret of cryptocurrency. Even though we've started hearing stories of traders turning $17 into $3 million by investing in peanut coin, the reality is that unless you get insanely lucky, your chance at picking something that even makes any money is incredibly slim.
I disagree with that. The chances of you picking something that can make you money is extremely slim. And I disagree with that because if you are someone who is smart and you just take the time to study the crypto market, then you can find patterns and you can pick crypto projects that can do exponentially well. If you're someone who's looking for the absolute safest investment, then you know, hey, it's a great idea for me to probably invest in Bitcoin or probably invest in BNB or potentially check out Solana, because those 3 crypto projects you have seen since they have launched, since they have been created, year over year, every single bull run, they always hit a new all-time high. Now, out of those 3 crypto projects that I just mentioned, there are other crypto projects where every single year, every single bull run, they hit a new all-time high. So if you're someone who is investing in crypto and you have a very conservative mindset where you don't want to lose your money, you got to protect your money, but yet you still want to expose yourself to potentially make profit, then look at those crypto projects where year after year, and when I say year after year, I'm referring to the bull market, it always hits a new all-time high. So it means regardless of when you buy it, even if you buy it at a terrible point, history shows us it always runs back up, and you are now positioning yourself in a great position to make profit. And let's say you just don't want to buy one of those crypto projects. You want to buy a crypto project that could potentially be a little bit more risky, that could give you a little bit more return. There are certain rules and principles that you can put into place that lines you up to make great profits, such as number 1, buying crypto project during the bear market when they're at an all-time low, because when Bitcoin pumps, guess what? All the other crypto projects will pump as well also. So buying at a time where you're set up to make exponential amount of profit instead of buying crypto project when it's at an all-time high. Number 2, buying when the fear and greed index is extreme fear. Why? Because we know a lot of times when it's at extreme fear, that's when we see prices are retracing significantly. That's telling us, hey, this is a really cheap price to accumulate certain crypto projects, because there's a high likelihood the fear and greed index is now going to shift to extreme greed. And when it's shifting towards extreme greed, that's when we start seeing prices of crypto project really pump. Now, obviously, you want to avoid those crypto projects that are high speculative and that have random names and that have no team behind it that you know of, such as the speculative meme coin like Farcoin. It did extremely well, but what are the chances it's really going to do well? Or Squirrel Coin that was created based on some meme in New York. Yes, it did well, but what are the chances that it is going to survive the bear market and continue to go down? Very, very slim. But if you have fundamental rules into place and you know what to look for, and you use buying psychology, you use technical analysis, then you can buy a crypto project that can do very, very well. And you see that when you look at the history of the crypto market, of which crypto project that you accumulate during the bear market, typically you will see them run up during the bull market.
To at least help tilt the odds in your favor. Like, just consider this. As the Market Sentiment blog points out, there are currently over 4,300 publicly traded companies in the United States. But there are more than 15,000 different cryptocurrencies. And of the more than 40,000 coins that traded in an exchange at least once in the last 10 years, only 38% are still alive. That means right off the bat, forget even making a profit. The chance of a random coin surviving for more than a few years is 1 in 3. And oddly enough, this is eerily similar to stocks.
I think one thing that a lot of people don't realize is stocks and crypto are very similar. When you look at this crypto, it's not just some random crypto coin. That crypto is a business. It is a company. There are people behind it. It has a CEO. It has a VP. It has a board of director. So you have to look at a crypto project from the lens of a business. So there are certain crypto projects where year over year, they're making money. Year over year, they're profiting. So when you see a business where their first year, let's say they make 50K, second year, 100K, third year, 500K, they hit $1 million, and year over year, they keep making more income, becoming more profitable, they keep expanding, and they're showing healthy cash flow. That is a good sign. And in the stock market, when you have a company like that, it will continue to grow and increase in price. And it's the exact same thing when it comes to cryptocurrency. We have to keep in mind that these are startup companies. And the truth is, in the world of business, especially when you're looking at startup, most of them do fail, especially within the early stages, within the first 5 to 7 years. But if you're able to analyze some of these crypto projects and you're seeing they have a good cash flow, they have a good team behind them, who are the founders, those are signs to say, hey, there's a high likelihood that this crypto project has potential to not just do well this bull run, but also do well the next bull run. But overall, when it comes to investing and trading crypto, my mindset for most of these crypto is not, I am going to hold this crypto project for years. No. In the bull run, it is my time to take profit and sell, because a lot of times if you look at the crypto market historically, crypto projects that are within the top 10 1 year, the following bull market, those are not the same crypto project. So one bull market, they'll do exponentially well. You'll see them hit new all-time high and they do amazing. And then the bear market comes, prices retrace, and then once the bull market comes, once again, those same crypto projects are not there. And you can see this historically when we look at the top 10 crypto project from the last bull market to the top 10 crypto project in this bull market alone, and that you can see that nearly 50% of them are not there, excluding stable coins, of course. So remember, when you are in the bull market, that is the time to take profit. And then once the bear market comes, that is the time when I buy aggressively, because once Bitcoin starts to pump, it's going to take everything else up with it. And you want to avoid buying aggressively during the bull market, means when prices are really running towards that all-time high, or you see prices very close towards that all-time high, because everyone that had bought in that crypto project in the bear market, when they bought that crypto project when it was so cheap, and you're getting it when it's already 10x, when it's 50x, and it's already 100x, you have to realize those other individuals, they are going to sell. And when people are selling crypto, it forces prices to come down. And when prices go down while you're holding that crypto project, well, guess what? The value ends up going down. So we accumulate, buy aggressively during bear markets when prices are going down, and then we take aggressive profits when prices are going up and in the bull market. This is why I say, if you're someone who's brand new to crypto and you just want to make a little bit of profit, stick to the major crypto projects. Stick to your Bitcoin, stick to your Ethereum, stick to your Solana, stick to your BNB.
Again, here's where things take a bit of a turn that was honestly unexpected. Vanguard found that lump sum investing outperformed dollar cost averaging 69% of the time. And oddly enough, the same applies to Bitcoin. Since 2013, if you invested a lump sum into Bitcoin instead of dollar cost averaging, you would have come out on top 66% of the time. As an example of this, just take a look at what happened in 2018 and 2022. If you dollar cost averaged during that time, you would have had a much lower drawdown than someone who invested a lump sum at the beginning of the year.
Doing this definitely works. And like I said previously, it depends on two different things. So here is one important strategy or something to note when it comes to rather buying lump sum or dollar cost averaging. Number one, it depends where are we in the crypto cycle. Based on the chart that Graham just showed, you can see that it is currently a peak in the market. So Bitcoin is initially at an all-time high versus, let's say we were in the middle of the bear market, meaning Bitcoin was at its lowest price possible. So if Bitcoin was at its lowest price possible and then you end up buying a lump sum at that price, you're going to make exponential more profit versus if you bought Bitcoin at the previous all-time high. Right now, the previous all-time high of Bitcoin is about $68,000 in the last bull market. Now, in this bull market, Bitcoin's all-time high is about $109,000. So that's almost a 100% return if you bought at the previous all-time high. But let's say you switch that around and you decided to start buying Bitcoin only once it was in the bear market, and then you dollar cost average once it was in the bear market, then you would have made over 4x return. That is why the time you choose to dollar cost average matters so much. If you decided to buy $10,000 worth of Bitcoin when it was $30,000, and then when Bitcoin went down to $20,000, you decided to buy another $10,000 worth. And then when Bitcoin went all the way down toward that $15,000 price range, you decided to buy another $10,000 worth of Bitcoin. That would give you an average cost of around $20,000 of Bitcoin. So when Bitcoin reaches its new all-time high, which was a little bit over $109,000, guess what? You almost 4x your investment. So dollar cost averaging versus lump sum really depends on, number one, your financial situation. Some people may only able to put in $100 into Bitcoin, into cryptocurrency every single month because you have a W-2. You get paid bi-weekly. You get two incomes per week, so you can only buy during those times, versus you're someone who has a large savings account and you have this money just to set aside to invest in crypto. So every single time you see the crypto markets going red or prices dropping significantly, you just decide to buy an extra $100, $200 every single time. So both strategies does make you great profit, but what matters a lot is when you decide to actually buy, which is the timing and what price you decide to buy at. But one thing I will say about buying lump sum is when you see crypto is pumping, it's going up, we're in the middle of the bull market, you see it reaching all-time high, prices are skyrocketing, that is the worst time to buy crypto. That is the absolute worst time to put a lump sum of money into any crypto project, because you are just setting yourself up to fail. And even if you do that with a crypto project that does always hit all-time high, what you're doing is significantly reducing the amount of profit you can make versus buying it on red days or when prices are going down significantly or when it's during a bear market.
All right, so in terms of how Bitcoin compares to the overall cryptocurrency market, I have a feeling you're going to want to see this. Here's how the top 10 cryptocurrencies have changed over the last 10 years. And as you could see, really one thing has been clear. The number one pick consistently has been Bitcoin.
I already talked about Bitcoin being an asset that always reaches all-time high, but if you're someone who also wants to make money in the short term, you can actually use this long-term perspective to make money in the short term. Because Bitcoin, every single bull run, repeatedly, back since 2009, always hits a new all-time high. If you're someone who wants to make money in the short term, you typically look at these small cap crypto projects. You look at these new meme coin, you look at these super risky cryptos. The thing with those risky cryptos, that is the best place to lose your money. So if you're someone who wants to make money in the short term and you're thinking about potentially swing trading, you're thinking about potentially day trading, well, guess what you can do? You can day trade and you can swing trade Bitcoin. And the reason why I say if you're brand new, really consider swing trading and day trading Bitcoin if that's the avenue you want to go down, is because Bitcoin, even if you mess up, even if you screw up, you know, historically, it has proven since it launched, since it was created, it will always reach a new all-time high. If history repeats itself, even if you buy Bitcoin at its peak, at the highest point, while you are trying to swing trade, while you're trying to day trade, while you're trying to make some short-term profit and you mess up, it's okay. Because history shows us it is probably going to run back and you're going to walk away as a winner with more money in your pocket than you did when you first allocated into Bitcoin. And if you don't want to do Bitcoin, that's perfectly fine. Look at other crypto projects that since they've launched that they have shown to see hit all-time high. But what you have to be aware of when you are picking that crypto project, don't pick a crypto project that is brand new, that just came out this bull run. Pick a crypto project that has been around for at least 2 bull runs to show, okay, this crypto project has been around for a few years and every single year we see it hit a new all-time high, showing that it has some positive, strong fundamentals, and clearly the world sees it valuable because every single cycle there's more people that are buying it. Because these other crypto projects that hit all-time high and then never hits all-time high again, it is because they did well, because they just came out, they just launched, but people don't see that much value in it enough that there are more buyers coming in than holders that already bought that crypto project. So there's not enough buyers to push the price to a new all-time high.
And gone similar to the S&P 500 over the decades, is there an investing strategy that one could utilize to consistently come out ahead? Well, that's what brings me to this website, top10cryptofund.com, where they've tracked the top 10 cryptocurrencies on a regular basis since January 2018, and then compared that to the overall index of cryptocurrency to see exactly how and where you could make as much money as possible. And this is what I found very surprising. The premise of this is that on January 1st of every single year, this person buys $1,000 worth of the top 10 coins split evenly with $100 each, and then they compare that to the overall market to see which does better. And this year, despite Bitcoin doing incredibly well, as of November 1st, this entire portfolio of the top 10 coins is only up 3% from the beginning of the year compared to 6% within the entire crypto market. How? Well,
Yeah, this goes back to exactly what I just said. Understanding when to buy. You have to realize typically when crypto market is pumping, the month of January is typically still a month of the bull run. So crypto projects are typically still high, especially because previous to January, you have the month of September, October, November, December. Now, during those seasons, during those 4 months, a lot of times you'll see crypto project pump and do extremely well. And then the following months, January, it doesn't give away all the profit it just made or it just gave within those previous 3 months or 4 months that I spoke about, which is September, October, and November. And once again, if you see this crypto chart right here from CoinMarketCap, seeing the top 10 crypto project right now versus the top 10 crypto project in the past, you will see it is not the exact same cryptos, because during the bear market, when prices retrace, what happens? New crypto projects come, new businesses are being built, and those new crypto projects may be better than the old crypto project. Those new crypto projects may have more funding behind it. They may have more capital. They may have larger corporations who are backing them up. They may just simply have a better product, so they do better. They may have better marketing. They may have better sales. They may have better X, Y, and Z. So that is why I always say in the bull market, we take profit. In the bear market is when we buy aggressively.
Remember, until November 4th, much of the market, besides Bitcoin, was rather stagnant, having barely increased off its prices from the beginning of the year. And now that the entire cryptocurrency ecosystem has seen a resurgence, most of those losses have turned into rather spectacular gains, with much of that having happened over the last 2 weeks. That, of course, is all going to be reported on the next update on December 1st. On top of that, if you include this data going all the way back to 2018, having consistently invested $1,000 each year into the top 10 coins, that'll equate to a total value of $20,829 on November 1st, all from an initial investment of $7,000. Compare that to the S&P 500, which is only worth $11,624 during that same time frame, and you could see that despite a lot more volatility, you would have made a lot more money. Of course, keep in mind that all of this is based on past results, which may or may not continue in the future, and a large part of how much you end up making from all of this is largely due to your luck timing the market.
Okay, yes, he is right that crypto is significantly more volatile than the stock market. But we also have to keep in mind is what comes first, right? So in order of operation, to make money in crypto, you have to look at the stock market. And it's just something good to know. So when it comes to order of operation, what affects the price of crypto? Because crypto is down here. So the stock market supersedes crypto. Right? So whatever stock does, we're going to see crypto does. When the stock market has an amazing day, crypto market is going to have an amazing day. If the stock market has a terrible day, we're going to see crypto have a terrible day. Now, what supersedes the stock market? Well, economics and political affairs. Whatever we see the leaders of different countries are doing, or what numbers come out in regards to employment rate, unemployment rate, consumer spending, all of those data is going to affect the stock market and it's going to affect the crypto market. So if you're new to crypto and you want to make as much profit as possible, you just have to start watching the news, seeing what are the leaders of countries saying, how is the economy doing as a whole, because that will give you an indication of how the crypto market is going and how the crypto market is going to go, so that you can make the best move to make the most amount of profit.
For instance, in 2017, your cryptocurrency investments would have resulted in an 84% loss by the end of the year, with a total loss as high as 94%. From there, 2019 didn't do that much better either. During a time where the S&P 500 saw a 29% return, the cryptocurrency portfolio made just 1.74%. That's it. Despite Bitcoin seeing an 89% increase that year, almost every other cryptocurrency lost value with the exception of Bitcoin Cash and Litecoin.
And that is why I said what I said. If you are someone who is in crypto and you don't want to expose yourself to some of those crypto projects that are extremely risky but yet can give you exponential gain, that is why we stick to the more larger fundamental crypto project, which is Bitcoin. Because time and time again, as you see Graham showing us the data, it performs very well,
leading our cryptocurrency portfolio to have underperformed a savings account. As it turns out, things didn't really turn around until 2020 and 2021.
Okay, yes, the savings account. Now, this is the thing with crypto. You have to realize that even if you want to take a conservative route, let's say that savings account route, there are a lot of crypto exchanges that allows you to take some of your crypto and have it in stable coin, which every exchange typically allows you to do that. And your stable coin, it won't be fluctuating up and down with price. But this is where it'll supersede your traditional savings account, because now you can get potentially 3, 4, 5, 6, 7, 8, 9, 10. I've even seen up to 18% interest on holding a stable coin. Now, what you have to keep in mind is that access to these type of exchanges does depend on where you live. What country do you live in? Because when it comes to using crypto exchanges, sometimes they're restricted depending on your geographic location. But a lot of these crypto trading accounts, you can have your money in stablecoin, which it won't fluctuate because it's pegged to the US dollar, allowing you to make significantly more profit than you would if you were just to keep it in your traditional savings account. With that, where you have to be careful is that make sure you use a crypto exchange that's established, a crypto exchange that people know. One of the key things that I look for are for crypto exchanges that have survived the bear market. Because look at the previous bear market. How many crypto exchanges have come and then they have gone? During the bull market, everyone's making money. Everyone's happy. It's amazing. It's great. Yes, yes, yes. But during the bear market is when we really start seeing, well, which crypto is going to last and which exchange is going to last. And the exchanges that typically fail are the exchanges that are typically new, that aren't very popular. Well, you have very popular exchanges like your Binance, your Coinbase, your Kraken, which have been around for many years, that have survived more than one bear market and that have a positive reputation. That way, you know, you're not just going to put your money there and then one day the exchange is going to disappear or they're suddenly going to file for bankruptcy.
Which was largely a bull market for cryptocurrency. And those gains overshadowed the rest of the market if you continued buying in consistently. But this is a prime example that even though you can make a lot of money, you could also lose a lot of money very quickly. Although in terms of why Bitcoin and cryptocurrency has gone up so much lately, a lot of it has to do with less regulation. In this case, the community is rather bullish on a new proposal that would support rather than criminalize cryptocurrency by creating what's called a reserve fund. This was initiated by the Senator Cynthia Lummis that would make the United States the largest government of 5% of the network's total supply, similar to the country's stake in global gold reserves.
It is so crazy looking at this now because Graham, it's no longer a dream. Like, it happened. This already happened. It happened. It certifies. It's real. We have it right now in the world and it's going global. And more countries are going to start doing this and are already doing this.
Although despite me speaking directly with Michael Saylor for a few hours, being bullish on the blockchain network and being a long-term believer of Bitcoin over the next 10 to 20 years, I do have a warning for everybody watching. Since there are so many similarities between cryptocurrencies and penny stocks, if you don't want to lose money, just keep a few of these things in mind.
That is a really good comparison. There is a lot of similarities between penny stocks and the crypto market. Because what you have really is about penny stocks is that you can make so much profit with penny stocks. If you are, let's say, an incredible day trader in stocks, you can make significantly more profit trading penny stocks than trading your blue chip stocks, such as your Microsoft, your Amazon, your Tesla. And the reason why is because penny stocks are just so volatile. But the problem with penny stocks is that a lot of those companies typically fail. A lot of those companies do not end up doing well. They typically will have a massive spike for 1 day or 2 days, or they may trend for a short period of time. But most of the time, majority of the time, you see prices of those stocks tank, and then you see them just consolidate, and then over time, they just slowly trickle down, and the business ends up filing for bankruptcy or never spikes up again, and you bought an extremely high price and you're left holding the bag or in the negatives. And that is the truth when it comes to crypto as well, because a lot of them are startup small companies just trying to make their way. So they spike up well, Bitcoin is spiking, or they're new and there's an excitement to this new crypto project that's launching. But then over time, the company isn't doing well, the crypto isn't doing well. People start losing interest. They're not continuously innovating, growing. They're not working on their project itself to continue to scale. And it just continues to go down, down, down. And sooner or later, that crypto project failed.
One, research has shown that the biggest enemy to your portfolio isn't Gary Gensler, it's overconfidence. A study published in 2017 found that when investors are successful, they disproportionately attribute their success to ability rather than luck, which leads them to making even riskier investments that eventually lose. Not only that, but investors are more likely to downplay their losses and mentally exaggerate their wins, leading them to want to keep going.
One of the biggest mistakes I see a lot of new traders make is that they'll invest in a crypto project and they do like a 2x. They're like, yes, I put in $1,000. Now I'm at $2,000. And because they're winning, what they decide to do is they just take a bunch of money and they start throwing into the crypto market. That is absolutely terrible. Just because you had one good play, it does not mean you are an amazing trader. Just because you play one great basketball game, it does not mean you're going to be the next Michael Jordan or LeBron James or Kobe Bryant. And the way you can avoid this trap from becoming overly confident or just getting lucky once is by having good risk management. And having good risk management is the single most important factor of being a good trader. If you're able to just master that one skill, that one attribute, then you set yourself apart from the 99% of people, and you set yourself to be part of the 1% who actually succeeds, who crush in this industry, who will be able to make their first 100K, 200K, 300K, just having really good risk management. And having good risk management means having rules into play. And what I mean rules in play, it means you tell yourself, hey, I'm going to put money in this crypto project. If this crypto project goes up 100%, no matter how bullish I am on this crypto, I am going to take 10% profit, 50% profit. I'm going to take out all my principal investment and let the rest ride. Putting rules into place like that so that no matter what happens, you walk away as a winner with more money in your pocket. Also putting rules into place just in case prices goes down. You tell yourself, hey, if this crypto project goes down to this price, I am going to dollar cost average and buy a little bit more to push my average price down so that if prices and when prices continue to start moving upwards, then I'll be in the profit or a lot sooner. Or you can even tell yourself, if prices go down, I am going to sell. I am going to sell at a loss. It's okay. I am perfectly fine losing maybe 5% of what I put in, knowing I'm going to put it back in this crypto project that's a little bit more secure, that's showing signs it can probably move significantly better. So having rules into place like that will stop you from making terrible mistakes to lose profit, because now you're taking away the emotion out of it. Instead of buying and say, oh, I hope it goes up, I hope it goes up. Now you're taking away that false hope. And when prices go down, you're not just holding on for dear life because you don't want to lose this money when it's already down. And some rules that I put into place that helps me when it comes to maximizing the amount of money that I make in crypto and really lowering the amount that I can lose is, number one, I always tell myself, when the crypto project hits this price, I am going to take profit. So before I even buy that crypto project, I've already decided when it hits this price, this is how much I am going to take out. Number two, I tell myself, if prices go down, this is what I am going to do. So having a game plan in place for price going up and prices going down. And then number three is a rule that a lot of people don't implement in their crypto trade. And I promise you, if you remember this one rule, just remember this one concept, it is going to save you so much headache. It's going to help you so much more in your crypto trading and investing journey, which is set a maximum amount that you're willing to put into any crypto project. I'll give you a simple example. Let's say you have $10,000. For simple math, we're just going to say you put in a rule that you're only going to allocate a maximum of 10% of your $10,000 into any given crypto except Bitcoin. So now you know when you see a crypto project that you feel has massive potential that can do extremely well, you only put in maximum 10% of your $10,000, which is $1,000. Because as much as you love that crypto project, there's a high chance that it can fail and it won't go the way you want. But because it fails, you only put in 10%, you still have 90% of your funds left over. Another rule you can put into place that I do is I never get married to any crypto project, because what is my purpose of investing in crypto? To make money, to make more profit so that I can continue to live, do whatever I want to do. And getting married to a crypto project goes against that, because crypto is just a tool. And the purpose of that tool is to help me to get from here to here. So don't get overly attached to a crypto project. So that means when you see it run up, take profit. When it's not performing the way you want it to perform, you have to be willing to walk away and take your money to put it into a crypto project that will give you the type of return and the type of risk management that you're most comfortable with.
The hardest barrier for an investor to overcome is emotion. Like at first, you're hopeful that you're gonna make a lot of money. You see the potential.
Didn't I just say that?
Hear about the people making life-changing money with $100, and you think to yourself, well, if they could do it, I could do it too. But unfortunately, that is where greed sets in. Let's go a little heavier so you make more money. Everything is going up, so it'll go up even more. If I don't get in right now, I'm gonna lose the opportunity. And then you're hit with fear. It's the fear of missing out on more profit that keeps you in longer than you should. And then from there, it's the fear of loss that is so much more powerful than just about anything else that you could feel. And then finally, you have regret.
One of the most common thing I have found between advanced traders and beginner traders is that advanced traders or advanced investors have great control of their emotions. The more robotic you can be, the more successful you're going to be in investing and trading crypto. And when I say robotic, I mean, number one, you remove all your emotions. You're focused on that one goal, which is to make profit, to make money. And like a robot, it has code. It has certain programs, meaning if this happens, you do this. If this happens, you do this. If this happens, you do this. So the more robotic you can be in your crypto trading and investing, like I just talked about, putting rules into place, it will allow you to get out of your own way and to be more successful in crypto. Keep on going, Graham. Tell them the facts. Tell them the truth. Everything's Graham saying right now. I love it.
What if you invested in this versus that? What if you stayed in a little bit longer? What if you missed this opportunity? I don't want to look back and regret that. All four of those emotions realistically will impact your performance as an investor if you don't get them handled. After that though, 3, the less money that you have, the more likely you are to make riskier investments to want to catch up.
A lot of people don't realize this, but the less money you have, the harder it is for you to invest and trade money in crypto. And the reason why the more difficult it is, because your risk management has to be so on point, right? Simple example. You have one person who's starting with $10,000. You have another person who's starting with $500. The $10,000 trader takes a bad trade. Prices are going down. They lose $500. So now they're at $9,500 versus the trader who only has $500. If they're going to a trade and they do a bad trade because they're very emotional and they see prices pumping and they want to get into that crypto project and they buy it, but then everyone starts taking profit and now they ended up losing their $500. It's the end of the world for them because they just put in everything they had. So that's why when it comes to crypto, number one, you need to have good risk management like we just talked about. But then number two is don't just put in such a small amount of money like $100, $200 if you are looking to make profit in the short term. If you are dollar cost averaging, or if you're putting in $100 every so often for the long term, then you're significantly better off. And a lot of people ask me, well, then how much should you start with? I always say, start with the amount of money that you're comfortable with. And the reason why I say that is everybody's comfort level is very different. And the experience you learn if your comfort level, let's just say, is $500 versus someone else's comfort level, let's say is $10,000, is you will gain experience from that. And that experience will help you be a better investor or be a better trader. So I do not think there is the perfect date to get into crypto. Is just start with what you have, because starting will get you moving forward and becoming a better investor and trader, which results in you making more profit, making more money a lot earlier. He's 100% right. I have found a lot of people that the less money they have, then the more riskier investments they make. When the reality is the less money you have, the less risky you should invest and trade. Why? Because you don't have a lot and you could potentially lose it all. That is why if you're starting off with very little bit of money and you're looking to make some profit in the short term, hence why I talked about looking at potentially swing trading Bitcoin, swing trading crypto projects that historically have always shown to hit new all-time high. So when you're starting with a smaller amount, you're still putting yourself in the position of the highest probability to succeed.
Finally, 4, beware of fast, quick, easy profit. I've been actively watching Bitcoin since late 2016, and I have seen so many times people invest and make a substantial amount of money, only to lose practically all of it when it comes crashing down. The only investors that I have seen consistently actually make a profit have been the ones that just buy Bitcoin, hold, and do nothing. I know it doesn't sound exciting, but it's true. The boring investors that don't trade, don't speculate, and just buy in an amount that they're willing to lose end up doing the best long term.
I agree with some of that and I disagree with some of that. The part that I agree with is, yes, investors that just buy Bitcoin for the long term will make money. 110%. History has proven that. And people that are constantly chasing fast money all the time, you are going to lose money, especially if you're just always chasing fast money and you are starting with such a small amount and you're taking the highest risk. It means probability is against you. But we have seen historically, even if you put rules and principles into place, you can succeed as a crypto investor and as a crypto trader. And I've told you some of those key rules that are into place, such as accumulating during the bear market when prices are cheap, accumulating when the fear and greed index is on extreme fear, accumulating crypto projects that has a strong reputation, putting in risk management into place, diversifying correctly, and taking profit when you see prices are moving towards the upwards direction, knowing technical analysis, which is a combination of statistics, probability, mathematics, understanding psychology of investing and trading. And once you learn all of these things, what you're doing is you're significantly mitigating the downside of you potentially losing money, and you're significantly increasing the probability of you making profit. But if you're someone who doesn't want to take the time to learn all of those things, then yeah, just invest in Bitcoin, invest in Ethereum, invest in those blue chip crypto projects that's being accumulated by the banks, by countries, because those are the ones that are probably going to be around for a very long time and that are going to continue to run up in price because they're being adopted at an international level.
Lastly, let me just say this. When it comes to 99.9% of cryptocurrency, it's the wild, wild west. Anything could happen, and there's a solid chance that you could lose a lot of money. Even with Bitcoin, some of these price targets, at best, are educated guesses, and at worst, it's pure delusion.
One thing I found out when it comes to Bitcoin price prediction, a lot of times when you see these articles that say, hey, Bitcoin to 100K, Bitcoin to 200K, Bitcoin to 300K, a lot of times those articles are wrong. I don't know who these analysts are and where they get these prices from. I don't know if they're just using the Fibonacci extension indicator, but I've just found a lot of times people are typically wrong when they start guessing what price this crypto project could potentially go to. Look at the last bear market. When Bitcoin was crashing, so many people were saying Bitcoin's going to 10,000, Bitcoin's going to 10,000. And I've just learned when it comes to investing, when it comes to trading, when it comes to life, even all, you have to watch the masses and do the opposite. And because everyone's expecting Bitcoin to hit $10,000, well, guess what? It never hit $10,000. And I was buying it, not waiting for it to hit $10,000. And what happened with Bitcoin? It went all the way down to a $15,000 price range. And once it hits that 15K, it ended up running all the way up to a new all-time high into this $100,000 price range. So everyone who was waiting for Bitcoin to hit $10,000, guess what? They just missed out on a potential 4x, 5, 6, 10x on a lot of other crypto projects, especially if they're using Bitcoin as an indicator of knowing when to buy. So I've just come to the conclusion, when you start seeing these articles that said Bitcoin to $1 million within the next 5 months, I take those things with a grain of salt. My rule of thumb is simply, as you see prices go up, look to take profit, so that no matter what, you walk away with more money in your pocket. And when you see prices suddenly start going down, that is when you can accumulating at key levels of support, dollar cost averaging, putting in rules that will help you and that make it easier for you to win and succeed.
Sure, there are a lot of positive signals. I'm highly bullish for the future, and it could one day trade for $1 million a coin. But there's also a chance it won't anytime soon, and that needs to be considered, just so you don't buy in more than you're willing to risk. At the end of the day, I don't mean for this type of video to discourage anyone from participating, but it is a reminder that this sort of investment is inherently risky. And by better understanding why some people lose so much money, you could better protect your own investments to come out ahead.
I always say that a lot of people that invest in crypto are very optimistic. So one thing that I do, regardless of which crypto project, I always tell myself, okay, our price is going to go up. Let's say prices go up. What exactly am I going to do? And then I say, what if prices go down? If price goes down, what exactly am I going to do? You need to always have a plan in place. And I know I've said it so many times in this video, but have a plan in place for both scenarios, for both situations, prices going up and prices going down. So no matter what happens, you don't panic, you don't get overly emotional, and you don't make a terrible decision, end up regretting it.
There are just so many curveballs that could happen on a moment's notice, and that needs to be taken into consideration, at least before you spec out your Lambo by 2030. I also believe there's no harm in taking some profits if you're overly invested in a single asset class that's very volatile, or if you're up a life-changing amount of money. There's no reason to keep risking it. I just think it's a good idea to hear out as many different opinions as possible, hear as many different perspectives as you can, and then come to your own conclusion.
And I see a lot of people make that mistake. They'll be holding a crypto project, and let's say they're up already 13K. They're like, oh, I'm up 13K. Well, I want to be up 15K. Once it hits 15K, then I'm going to sell. But the problem is the market isn't going to wait for you. And now you went from being up 13K, well, now you're up 14K. Well, now you're at 14,500. And you just need $500 more till you hit 15K. Well, guess what happens? Now the market crashed. Now prices start going down and start going lower and lower and lower. And I see this happen repeatedly. Do not risk all of this profit for such a small amount of profit. That is called having poor risk management. Do not risk 15K, 20K, 90K just to make an extra 10K because you like that nice round number. Take profit as prices continuously go up, so no matter what happens, like you already know what I'm gonna say, so you walk away with more money in your pocket. Or better yet, in your crypto wallet.
In my case, I tend to believe this Bloomberg article, which argues that Bitcoin can replace a small part of your portfolio without increasing volatility and risk. For example, just a 1% allocation to Bitcoin has so far increased your returns by 1.3% with nearly identical volatility as bonds, which is incredible. So no, I'm not against Bitcoin. If anything, I'm actually really for it, but I just want you to be a safe, long-term, stable investor that doesn't lose money and is actually profitable. That's why you should only invest what you're willing to lose, take it slow, hold long-term, and no matter what, hit the like button and subscribe if you haven't done that already. So thanks so much.
Hit the like button and subscribe if you haven't done that already. And if you have any crypto questions for me, you guys drop your comment in the comment section and I will answer every single one of them.